Hey guys, PK here. In this video, I'm going to be talking about whether you should be fixing your home loan, your investment property loan, or whether you should keep it variable. And of course, there is no discrete right or wrong, so I'm going to educate you so you can make the best decision. So hi, my name's PK. I help people achieve passive income in the long term in property investment by buying high growth, high positive cash flow properties without using a buyer's agent that costs a bomb, without spending their weekends at inspections, and without wasting months doing research on realestate.com and RP data and all these sorts of things. Okay, so let's get into this video. Let's talk about the pros and cons of fixing. All right, so when you fix a loan, it's basically like saying that we've locked in an interest rate for an X period of time. So the first thing to know is actually that set period of time is completely your decision. It's not that you have to set that fixed rate for 1 year or 2 years or 3 years or 4 years. It's completely up to you. The banks will have different rates. You can decide. But one of the pros of fixing your rate is that you have some certainty, right? So let's say you think that in interest rates might rise, regardless of whether they rise or fall or anything else, by fixing for, let's say, 5 years or 3 years or 2 years, you know exactly what interest payment you're going to make every single month for that duration of time. So what that allows you to do is you can plan your property investment strategy, you can plan your lifestyle, your household budget around that set amount, okay? So you have some surety, some confidence that this property isn't gonna make you or break you, or rather it's not gonna flood you in unexpected interest expenses. The second pro for fixing your rate is that most often a fixed interest rate as opposed to a variable is actually cheaper, right? So right now, the variable interest rate you'll get with most banks is more expensive, sometimes almost like a percentage more, 100 basis points, a whole percent more than what they'll give you on a fixed rate. So what that means is that obviously by fixing it, you're paying less interest. So that's fantastic, all right? It's in one sense, it's a no-brainer, but that's the other pro, right? By fixing, you get a lower interest rate now and for the duration of that fixed period. So there's interest rates that are less than 2% right now if you want to fix. So it's pretty hard to say no to them. But at the same time, there are many cons or downsides or drawbacks of fixing that you should be aware of. And Simon, if you're listening, this video is for you. I should have said that at the start because you asked me this question. So what are the downsides of fixing? Well, one of the cons of fixing is that you can't take your equity out. So let's say you have a $300,000 loan. You've just bought that property. The property goes up by $200,000 in a year. It's probably not going to happen. Let's think of a more realistic example. $50,000 capital gain in the first 6 months. You can't go back to the bank and say, look, Mr. Bank, I'd like to take the equity out so I can buy that next property using this equity. You can't do that. If you fixed your loan, you cannot refinance. You can't harvest equity. You can't pull out equity with the same bank. Of course, you can do it if you really want to, but then you have to pay the break costs to basically say, okay, I'm going to early than expected, I'm going to break that fixed period, and that can cost like $10,000-$20,000 sometimes. So it's probably not worthwhile accessing your equity if you have to pay 10G to access it. All right, so if you are at the start of your investment property portfolio, you may want to think twice about fixing, because what you want to do is buy types of investment properties that go up in value in the first year or 2 years, and then use that equity to fund the second deposit, and another year fund the third deposit. That's how acquisition works in property investing. And if you're going out there chasing the cheapest rate and fixing all your home loans, then you can't take that equity out. You have to put your hard-earned money into your second deposit, and that may take significantly longer while the property market continues to increase, which you're missing out on. So that's one of the drawbacks. The inability to refinance. The second drawback is obviously very obvious. It's that you run the risk of interest rates actually reducing. So let's say you fixed your rate, and this is a real example. I think about 3 or 4 years ago, I thought interest rates weren't going to go down. I thought they were going to increase. So I fixed a whole bunch of my loans at about 3.9%. I think one of them was at 4.09%. One of them was at 4.2%. And I thought I was getting an amazing deal. I'd locked that in for, I think, 4 or 5 years. And lo and behold, in the next few years, interest rates came down. So they're stuck paying a higher rate, whereas all these other property investors are paying a much lower rate. So that's obviously the downside of fixing. You're basically saying that you know more than the banks about future interest rate movements. And of course, it is possible to predict future interest rates movements to an extent. You can look at forward curves, things that I teach my students, but it's not an exact science, and banks do this way better than you or me, probably. That's what they're good at. So you're basically betting against the bank when you're fixing a rate, saying that interest rates won't go down, but they really well could. And even right now, we're at record low interest rates, basically zero. There is still a chance of interest rates coming down, right? I know it's hard to believe, but negative interest rate territory is a possibility. Right? And even if the economy continues to do fairly well, the credit markets may still have a pinch, which means that interest rates may go down further. Okay, so it's not a shoo-in decision that you should be fixing right now. I know everyone's saying the opposite. The third drawback of fixing your rates is that you can't extend an interest-only period. So interest-only periods are where you have said to the bank, and the bank has said to you that, okay, let's say for the next 3 years, you're only going to be paying interest, which is obviously good for property investors in a sense, because we're not putting our hard-earned money into paying the property off. Rather, we're using that deposit, that hard-earned money, to buy more properties. And the more properties or assets you control that rise in value, the more your wealth and passive income increases. And in the future, you can sell some to pay the rest off. Very simplistically, I'm putting this. But that interest-only period is, you can't play around with it in a fixed loan. So let's say you fix the loan for 5 years, the interest-only period's expiring in 2 years. Then for the balance of 3 years, you'll be paying principal and interest, and you need to be very careful that whether you can even afford that from a household budget perspective, or whether that's the best use of your hard-earned money, or whether you'd prefer to buy more properties. Okay, so that's the third drawback. And the fourth drawback is that you don't get an offset account. An offset account is something that absolutely every single property investor should be doing. An offset account allows you to put in money into like a transaction account, but the amount of money that you have in that account, it reduces your loan. And what that means is that you're paying less interest. So let's say you had a $500,000 loan, you had $100,000 in an offset account. That's not paying the loan off, but every night when that interest is calculated, the interest will be calculated on $400,000, not $500,000. So you should be having all your income, your job, your business, salary coming into that offset account, and you should be doing all of your transactions at that offset account, trying to keep that balance as high as possible. But if you have a fixed interest period in your loan, offset accounts are null and void. So even if you had a $500,000 loan and you had $1 million in that offset account, it wouldn't offset a cent of your loan, because offset accounts aren't possible against fixed loans, fixed interest period loans. Okay, so those are the 4 drawbacks. One was can't refinance to take equity out. The second was interest rates can go lower. The third was you can't extend an interest-only period. And the fourth is you can't have an offset account. The pros of fixing, like I mentioned, was security, knowing exactly what you'll pay month in, month out for a number of years. And the second pro was you might get a better rate as opposed to variable right now. So what's the answer? The answer is that it needs to be personalized. So I'm not going to tell you exactly what to do. It's not a cop-out. It actually is a very personal decision based on where you're at in the investment journey. But in general, I would say that if you're on the fence, if you're not too sure, make sure you have a property strategist help you. And even if you don't want to have a property strategist help you, what's possible is actually to fix a portion of your loan. So you don't need to go binary, black and white. You don't need to fix 100% of it. Why don't you fix 20% of it, or 30% of it, or 35% of it, or 36% of it? That percentage is completely up to you. You can choose whatever number you want. And that way you've hedged your bet. So you might say, look, I'll fix 50% of it because it's a much better rate, but I'll leave the remaining 50% of the loan as variable, just in case interest rates go low, just in case I want to draw equity, or just in case of all the other drawbacks that I've talked about. Okay, so that's a possibility, but here's the thing. A mortgage broker should not be telling you whether to fix or to keep it variable. That is not their job. Their job is to give you a loan and give you fundamental understanding of how lending works. They don't know any more than the banks. Don't lean on your mortgage broker for that advice. Become educated and figure that out for yourself. They can be an input, just like a conveyancer is an input, just like a quantity surveyor is an input, just like a property manager and accountant is an input into your property investment strategy and decision making. See the broker as another input, but you are the pilot of your plane. And of course, there's property strategists, those who are independent that can see the overall picture. But you should be making that decision based on facts and knowledge, and that's really the way to conduct advanced property investing. So let me know what you're doing. In these times, are you fixing your rate or are you keeping it variable? Comment right below. Are you fixing your rate or are you keeping it variable? Are you tempted to fix it, getting the lower rate? Or having heard all this, are you going to actually keep it variable? Right? So let me know in the comments, and yeah, give me a like or love if you're actually getting some energy back from this video. If it's actually helping, then give me a like or love, and I'll also leave a link below on how you can actually think about lending strategy, not just in the long term, but the short term, as well as the A to Z of property investing, and generate a passive income from property investing using the Property Investment Accelerator. So I'll leave that link in the below in the comments, but give it a like, give it a love. If you're watching on YouTube, subscribe and you'll get plenty of these videos. Thank you so much. PK here. Have a fantastic day. See you guys.